Good afternoon. You're watching. Well, this is a special show which we have set for yourself, for all our viewers, as we are celebrating 77 years of independence. It's a very special show to acknowledge the role of PSUs, which have played in nation building. It's been a stellar run for the entire PSU sector, especially in the last decade. But if you go back many decades, right from the foundation, be it jobs, be it overall development in the countries, entities have actually underpinned by the government's commitment to boost capex. PSUs across segments like banking, infra, power are fueling India's growth story and helping achieve her $5 trillion economy target. We are calling it India at 100 for its Viksit Bharat vision of 2047. So let's understand more about where some of these PSUs are heading and how PSUs are transforming corporate India and the nation in the bargain. And to understand whether there could be more steam in the rally which some of the PSUs have actually shown in the last decade or so. We have Vikas Khemani of Carnelian Asset Management to talk more about the fundamental aspect of PSUs in contribution in wealth creation, and Nuresh, who looks at charts as well, to talk about where could be the areas you should be building portfolios in the PSU space. Gentlemen, thank you very much for your time, and this is a special show on the role the PSUs are actually playing in the value creation for our investor community. So thank you very much for your time. Vikas, let me come to you first to set the stage. The role PSUs have actually played in nation building and also value creation for the shareholder community. Earlier, say 1.5 decades back, PSUs were not even considered investor grade. But now they actually form a very special part in the portfolios. So how do you see this transition and the change in the mindset which has happened?
After 70 years, banks were nationalized to provide banking for poor, but never ended up serving the purpose. Today, technology-driven initiative by Prime Minister has actually made banking for all available, and not only banking for all, we have had innovations like UPI and all those things within the public sector, which is again we underestimate. So what public sector can achieve. We have had UPI kind of setup with very little cost, a globally acclaimed infrastructure, right? So in last 10 years, what we have seen a remarkable shift in the accountability and governance and execution of the public sector enterprises, and that is what, if you see, has made many of these public sector enterprises very, very valuable. Markets are liking, all banks are moving towards 16-17% ROE profiles. All public sector units in the defense are doing very well with the new refound growth sector. All PSU in the oil, and I think except probably oil and marketing, that is where we still have a bit of a struggle. That's also kind of picking up. But in my opinion, whether it is gas or any other, I think the PSUs are being run reasonably well. Of course, things like BSNL still have its own challenges. We have seen a remarkable shift happening in the railways operational. So all those things are being taken note by the market, and some of the companies which historically were very, very, very poorly valued and underinvested are today being invested and liked by many market investors, public market investors, and which is the reason why we have seen such a remarkable wealth creation in the public sector enterprises space. And that has kind of also, coupled with the point tax collections, has reduced the need for aggressive divestment program by the government.
Right. So we'll talk about each of these PSU baskets and pockets one by one. But before that, Nuresh, I want your thoughts on the public sector enterprise index. It has been rallying for some time now. How do you see the longer term charts? If you could pull up the longer term chart for us, and the brief correction which is happening, do you think it will normalize going forward, or does it have more steam? That's the big question.
Available. Back in 2004 to 2007, it almost went up 3x, 4x. And the data is only from 2004. But if you were to create an index from 2003, the PSU index also did very close to what happened with the Sensex. It went up 5 to 8x. And that was the period of time where PSUs did really well. A lot of these names which we talk about were multi-baggers. So something like a Bharat Electronics was a 50-bagger, many of them BEML, etc. And post that, for the next almost from 2007 to 2023, nothing really happened on the index as such. We could not cross that 10,000, 11,000 mark, which was the top. We did see some recovery happening in 2014, 15, then in 2017, 18. But finally in 2022, 23, that changed. And we've doubled up on that index from 10,000 to 20,000. But the fact remains we are structurally in a case where the trend has started. It's just that rotation keeps on playing. So we started off with power names, then we got into defense, then it was railways. So my bet is next could be oil and gas. So overall, the structure is positive. The shareholding pattern is changing. I'll give you an example. So Hindustan Aeronautics had one point of time 15, 16% from LIC. Now they own 2%. And FI has owned 11, 12% of the company. So that's how the change has happened in the last few years.
Fair point. Let's go deeper and talk about select large spaces in the PSU space where big value creation is actually happening, and not only value creation, it is backed by fundamentals. There's a genuine transformation which is happening in the reported numbers, in the entire approach. And Vikas, let's talk about PSU banks. There was a time when many of them were either half-time book or even less than half-time book. What a turnaround it has been, to the extent that one of the largest public sector banks is now rivaling Reliance Industries as far as the profitability, the annual profit is concerned. What do you make of the PSU transformation, PSU bank transformation in particular, and do you still find value there?
PSU banks have done a tremendous job. And again, thanks to three things. I think historically there were three problems in PSU banks: governance, asset quality, and technology. And all three in last 4-5 years have been addressed structurally. I think, of course, we must give government a lot of credit for fixing governance first. They have picked up good quality people through the, public selection board. I think they pick up good people, leaders at the bank, and given them the freedom and made them accountable for delivering. And that has, I think, made huge transformation. Asset quality, thanks to the aggressive provisioning and IBC implementation, I think we are far better provided for and better placed in terms of incremental credit growth. And lastly, technology 20 years ago, 10 years ago, it was a build play. Today it is buy and plug play strategy. So all banks have invested significant amount of money in having technology. So they are also reasonably well placed. So I think given all these three things, the gap between public and private sector has narrowed down, and that has led to this kind of significant re-rating. I do believe that this gap can further narrow down, and these banks and institutions can keep doing well.
Right. Nuresh, let's compare, let's break down the PSU banking into two baskets. One is your, SBI, BOB, Canara Bank variety, the larger ones. Massive value creation happened there. But at the same time, say a JNK Bank, Bank of India, Canara Bank, this variety, the mid and small, also have actually made money, and numbers are not that bad. What are the charts telling you? Which are the ones, because this is a more portfolio approach show, which look good in your view on the long-term charts? If you can compare both the baskets.
So it has been a relative outperformer to focus on the large cap ones structurally, because what has happened is a lot of these large cap banks became a mixture of other 2-3 banks. So something like a Can Bank, a Bank of Baroda, and they've become really large. At the same time, even a PNB is large. So PNB is the one which has been a relative underperformer. So if one has to go into the smaller cap basket on the PSU bank side, PNB could be the one which would look interesting. And mind you, because of the recapitalization, etc., these are very large companies. Although prices will look much more smaller, the market caps are large. And the catch-up has already happened in a large way. And this has never happened in terms of PSU banks to private banks in a long time. And the problem is even private banking has not done well in the last 5 years. So from here on, one could be looking at both the choices. So earlier it was PSU banks clearly above private banks for the last 3 years. But now the choices are difficult. But in the smaller names, I'll go with PNB. In the larger names, it would be Can Bank going forward.
And what are your thoughts on JNK Bank, some of the really smaller ones, Central Bank, BOB, BOI, etc.?
So a lot of these smaller names have very low float. So something like a IOB has single digit floats, Central Bank of India has single digit floats. So that is where even if the markets continue to rally, the valuations will never look good, and institutional participation may not come going forward. So that's the reason you go with names where there could be institutional participation as well. So that's why I'm avoiding the whole Central Bank of India, IOBs, etc. Maybe the next league only could be Bank of India.
Investors should look at the bigger one, the higher quality one, so that the risk reward is much more attractive there. That's the word coming from Nuresh. But Vikas, since we are on the topic of lenders, there is also a non-banking lenders pocket as far as PSUs are concerned. Big money has been made there. The likes of some niche lenders, say Hudco, even Railway Finance Corp, or even some power financiers, PFC, REC, IREDA has made good money. How do you see this basket fundamentally?
Of course, right now I feel the valuations are quite stretched, but keeping that aside, again, same thing had happened when the power sector went for a toss, post 2012, 13 sort of crisis. And so for a 5, 6 years period, power sector, no new investments were coming. A lot of NPAs were there. As a result of that, these companies took a very big knock, and they were trading at 0.2, 0.3 times book. But as the power sector started doing well, NPAs have started reducing, and further growth is coming in the power sector. These institutions have done well and are again making 16-17% ROE and growing. So you have seen that catching up in the valuations happening. But I do believe that one should now relook at in terms of valuation. Does it make really sense at these kind of valuations? A lot has been already captured in, and we cannot ignore the fact that they are monoline cyclical businesses. Of course, as compared to past, lot of reforms have happened in power sectors. So the risk of what happened earlier may not be there anymore, or it will be less. But having said that, at this kind of sort of run up, one should see. I'm not saying they're falling, but at 1.5, 2 times price to book, probably with the wholesale lending, one has to be a little bit careful. So yeah.
Nuresh, let's talk about some of the PSUs here. Hudco, PFC, REC, IREDA, or even if I could just add in BHEL kind of names as well there.
So out here, the rally has been stupendous across the board, whether it was a smaller name, larger name, anything related to the finance side. And the fact is participation has also increased. So retail holding is also going up in a lot of these names. So out here, one needs to be careful that once stocks have gone up 5x, 8x, the risk reward is not great. And mind you, we have a history of being a leveraged side of the business. Any sort of risk, we can see a larger correction also going forward. So one has to be a little careful here in terms of choices, or be nimble footed to exit on the way down. But at the same time, there are interesting pockets like insurance from the PSU side, which is still at a discount to the broader private side. So that could be an interesting space.
Because let's stay with power, the power utility space, big reforms. I remember a time when some of these, power companies, the state-run power companies used to be saddled with massive amount of debt. There was a very amazing push and pull which was going on, whether power supplies will come until they pay off their arrears, etc. But look at the way some of the power utilities have actually got revamped. In fact, not only that, ESG pressure also came. But look at NTPC, Coal India, Power Grid. These utilities have actually upped their game big time. How have you seen the evolution of our own power utilities over the years?
Again, power utility is a function of the whole reform in the power sector. And secondly, more importantly, the huge growth in the power demand. See, let's face it, the demand is the biggest driver of everything else. Last 10 years, there was no new supply in the power segment which was planned. And today, India has grown, and with the newer infrastructure, more infrastructure, and manufacturing picking up, the need and demand for power has gone up. So as the demand for power has gone up, sector has suddenly become a lot more in vogue, in demand, and viable, and that's what is driving that whole sector, including utilities in the PSU space. And of course, government is also trying to do a lot of reforms around that. That's a one sector. I think a lot more needs to still happen in terms of reform. We are largely very high T&D losses. We have high subsidies. We need to kind of figure out how to fix that structurally. But still, I think given the fact that there's a demand, this segment will do well.
Nuresh, NTPC has done well, surely, along with its private sector peers, but there are new triggers like NTPC Green IPO lined up ahead. Power Grid has done pretty well. How are you seeing some of these, even NHPC, SJVN, why should we forget them? And talking about very big targets in the near term. NHPC was telling that they want to take their capacity 4-5x in like 5-6 years. How do you see this basket, power utilities?
So power utilities is an interesting basket in terms of trends, slow and steady across the board. And if you look at the way institutional participation has changed, so for example, if you look at power grid, 30% of the 33% of the company was owned by FIs almost a year back. Now it has come down to 28%. So after discovery, we are seeing a lot of exits happening, reduction. But at the same time, NHPC, SJVN have only started seeing participation in the last 1 year. So those two names could be interesting. NTPC continues to see a change from 10% FI holding to 17-18% now. So NTPC is structurally still strong. So overall, we are getting into a slow and steady move. That massive run which we saw in power utilities was unlike a utility stock, because generally we expect utility stocks to be defensive, but they made very aggressive moves. So from here on, one should have expectations of a defensive return and rather buy them on dips than on rallies going forward.
Vikas, let's shift focus and talk about energy PSUs. It all started with OMCs, which turned around and started, in fact, remember when there was a time when some of these OMCs were on the anvil, wanted to be sold off, right? The government was wanting to sell some of them off for strategic sale, etc. But now some of them are, declaring 40-50,000 crore annual profit, and there is no case to sell them. In fact, they become very big dividend givers. Now, the upstream part of OMCs are also starting to do well. Oil India, ONGC has surged to a 14-year high. Do you see scope for value creation in energy, and which are the ones that you like right now?
Like I said, I think, energy PSUs are especially, oil and I'm assuming you're referring to the oil marketing companies and ONGCs of the world. So they were always a good organizations. It's just that they are in some sense influenced significantly by the government because of the, link of inflation to the end product pricing. And to some extent, we have not had full deregulation of the sector, and hence, one of the reasons why at least we stay away from is that it's not full deregulation and it's going to be sensitive, politically sensitive subject. And it's fine, in a country like India, if government wants to have a couple of PSUs for handling the inflation, it's totally fine. And we don't have to invest into them. But in general, government is trying to put a lot more investments into the exploration and building capacities of the refining, given our energy needs are going up. Also, some of the PSUs are also investing significantly in the renewable capacity, also which is serving the overall purpose of the government as well as the country. So I think they're all in the right direction.
Right. Naresh, let's talk about HVP IOC. Somehow, the punch seemed to be missing, but of course, they made very good money. And do you think the momentum is there in Oil India, ONGC? What's your hypothesis? If one was to hold a stock for 2 to 3 years, what do you like in the energy PSU space?
So I have a personal bias, very positive on this sector as such. So earlier it was power, and now oil and gas in the PSU packs looks very similar to what happened with oil power 3 years back. We have windfall taxes, we have a regulation which is a problem, which was the case in power before, and we've started seeing the buzz around it in terms of change. Most of these names are at 6 to 8 times PE and 3 to 5% dividend yields. And most importantly, the float is also low, participation is also low. So if you look at ONGC, it's funny to see that public holding is 3.5%. And ETFs via CPSE ETF as well as the Nifty 50 ETF own 3.5% of equity. So hardly any participation in terms of left in terms of float. So when the things move up, and the stock has finally crossed 2007 prices. So structurally, a lot of these names have finally crossed 2007, 2014, 2015 prices, X of dividends. So look at these names, the whole basket, IOC, BPCL, ONGC, to be leaders going forward. So my view is not the most loved sector, overly regulated, very under-owned, and that is where the changes happen, similar to power. So I would be very bullish on OMC and ONGC pack out of the whole PSU basket.
Okay, so we've done this half-hour special, Naresh. If I were to take your recommendations on any 2 PSU names which our investors, viewers can actually keep in their portfolio for next 2 to 3 years. Which are the ones you will be most bullish on?
ONGC as well as BPCL, the whole basket. And if one has to go beyond this, so beyond the 2, I would be looking at insurance names, because LIC or New India Assurance, etc., they're out of picture. Nobody really talks about them and nothing has happened. So oil and gas and insurance is the 2 pack. So I would keep a basket on both the sides.
Insurance, clearly, insurance and oil and gas energy stocks are the ones Nuresh is recommending from a portfolio approach. Nuresh and Vikas, gentlemen, thank you very much for joining us on this special telecast on the occasion of Independence Day. But let's get you some more big voices with the value creation focus. The government needs to be mindful of effective implementation of capex programs regarding these PSUs. That's the word coming in from Deepam Sekhi, Tuhinakant Pandey, when we spoke to him exclusively earlier in the day.